Hey, what's up everyone? Welcome to another market update. It is July of 2024 and I want to give you a quick update on what's happening in housing and in the market here in Southern California. But first, let's start with some macroeconomic things that have happened over the past month and lots of news that is affecting the real estate market. So, number one, the Fed has gone out and said they haven't raised rates in their June meeting, but they did say that they're going to have one rate decrease, possibly one rate decrease in the second half of the year. So they initially started the year saying that they would cut rates 3 times. That's probably not going to happen, and it's most likely going to be once, which is going to happen in the latter end of the year. So that's with regards to rates. And that's because the inflation has been a lot stickier and hasn't gone down as much as they wanted it to. So as the inflation goes down, which it has, last month was a good month for the inflation reading, as it continues to go down, this will drag down the mortgage rates with it. So we're heading in the right direction, but it's happening slower than most people and the Fed anticipated. So that's with regards to rates. Another piece of welcome news for buyers was that the wages have been going up quicker than inflation. So that's really good for affordability. So if someone is looking to buy, and this is, I'm talking national, so this is not any specific case, of course, but wages have been going up higher than the inflation, so that's welcome news. The number of home sales is going down, which is to be explained or to be guessed from the number of listings because of how high the rates are. So not much of a surprise there, but you're gonna see some scary headlines of, oh, there's no transactions, oh, the number of sales is falling. Just understand that this is very comparable to the case last year, which was the lowest number of transactions we've had in a very long time. And it's still way too early to know how many transactions we're going to end up having this year, but it's looking very similar to what we had last year. Okay, and then the final piece of macroeconomic news is the home prices have appreciated in Q1 versus Q1 of last year. I think it was about 6%, give or take, which is great news. We're seeing much more organic and sustainable rates of appreciation versus what happened in 2020 and 2021. So we're in a healthy market. So this is really good news. Now, with regards to the demand, the supply, and the rates, we're hovering around the 7% interest rate. Obviously depends on what kind of loan, what kind of credit, down payment, so many different things, but we're in the 7% range, and demand is still strong. Supply is higher than it was last year, which is great news for buyers that are looking. You have more options, but it also puts a bit more pressure on sellers. So sellers need to be much more aware of the presentation of a property as well as pricing strategy. So you cannot stretch the price. There's more options out there. Yes, it's still limited inventory, but overall there's more options. So you need to be aware of what your strategy is in terms of the presentation and pricing. And buyers are looking for turnkey properties. So either adjust your pricing or make the property ready for someone to move in. If you have any questions about the market, we're happy to answer. Please reach out to us and we would love to connect with you.